Hello everyone, welcome to Elliott Wave Analysis.com YouTube channel. This is Henry and today is Friday, September 23rd and the time is 2 a.m. GMT. So today we are going to look at the dollar index. Okay, so as you know, the dollar has been rallying relentlessly, right, since the Fed is on a hiking cycle, rate hike cycle here, and we're gonna check out to see at least in the shorter cycle what we can expect, right? Now when you look at a certain instrument, you always need to look at it from multiple different time frames, short term, medium term, long term, right, to get an idea where we are. And also the alternates, right? The alternates is something that every analyst and waver and traders need to understand so that they can prepare themselves and adjust if needed, and also manage their risk whenever they trade. Okay, so here is a 60-minute chart of the dollar index. We're going to take a look at the shorter cycle here, which is pretty straightforward. Now in the shorter cycle, you can see there is a bullish sequence and right side up. So what that means is we believe in the shorter cycle dollar index still remains bullish and it should continue to go higher. Okay, now let's see what we got here. So we ended with 2 in the minor degree at 107.7. From there we are going higher. So that means we are now within this wave 3 in the minor degree, and within wave 3 we should subdivide into 5 waves, and we have 1 of 3 here, we have 2 of 3 here, and we have 3 of 3 here, and we got this 4 of 3 ended here, right? So I think this pullback here probably is driven by the flows of the US dollar yen. The BOJ, Bank of Japan, did some Forex intervention today, so could be driven the flow a little bit here by the US dollar yen going down. Alright, so now we have recovered a little bit more, and we are calling for the upside. So we are looking for one more leg higher basically to finish this wave 5, and with that wave 5 we should also finish wave 3. And that means though, after we finish with 3, we should be getting a bigger pullback again to correct this entire rally, and then from there we should be going up again. Alright, because it's only with 3, right? So that is the idea here, is that as long as we stay above 107.7, we should continue to go higher. Now let's take a look at a couple of different angles to see what we can expect, and also the alternates. Now first of all, let's zoom out to the 4-hour time frame. So here is the 4-hour time frame. Let me copy a couple of the labels here. So I'm going to copy wave 2, which is at the 107.7. This is right here. So this is our wave 2. Now based on this alone, you can sort of figure out what the count should be on the 4-hour. If this is wave 2, that means this has to be a wave 1. So then we are looking at the cycle that started from August 10th, right? This is the August 10th. Now of course we have a full complete labels in our service in all time frames, from weekly, daily, 4-hour, 1 hour. So if you do want to get a full count, you can check our service. We have 14 days trial, and the link is in the description of the video. Okay, going back here to the dollar index, if you look at the cycle starting from August 10, you got what looks to be a high sequence, right? This is a high bullish. So when you see a high sequence like this, you can simply measure the extension using the Fibonacci, right? And you can see that now as a guideline, with 3 it can go all the way up to 1.618. It doesn't have to, it's just a guideline, but it can go up all the way to 1.618. I'm not saying it should go to 117, but usually when you have a high sequence like this, you will take the 100% as kind of like the minimum, right? Now even the 100%, sometimes it doesn't reach there, right? For example, if we are really running out of steam in the dollar index, the wave 3 could be ending even before 1.618, let's say. Now remember, I'm just going to copy again this 1 2 3 4 5 here. So this is your 1, right? Let me see if I got it right. No, the 1 is here. Okay, so this is the 1 2 over here, and then this is the 3 4, right? So as you can see, the wave 3 in the minor degree in the red color doesn't even need to reach the 100%. Remember, the guideline says wave 3 cannot be in the shortest wave. It doesn't say wave 3 has to be 1.618. It doesn't say wave 3 has to be 100%. It only says wave 3 cannot be in the shortest wave. So if, let's say, if we are in the terminal phase in the dollar index, let's say, because we've been rallying for almost 2 years, okay, so that means your wave 3 technically could be even ending before reaching the 100%, and then you have a wave 4 which is correcting this wave 3, and then you have one more push to finish 5 waves up. Maybe that 5 waves up then is going to be ending, the entire 5 waves is only going to be ending at the 100% of the 1 and 2, which is possible, right? So as long as your wave 3 is not the shortest wave, in this case wave 5 is shorter than wave 3, then technically there is no rule being violated here. Okay, so that's the idea here. But the idea simply is to think of it that if you look at the structure itself, it doesn't look complete, because if you look, okay, first of all, if you look at the weekly and the daily, right? I'm going back to the weekly and daily of the dollar index now. Now you notice here, I think there is no question that this rally has been impulsive, starting from the bottom 2008, right? Impulsive. And even from here, if you look at it from here, which is from 2018, this looks impulsive and this looks impulsive, but it's only looking like a 3 swing, right? So if it is an impulse, we should be in 5 waves, right? Not in 3 waves. So from 2018 you got only 3 swings up, so it needs some kind of a 4 and a 5. Now that 4 is going to be a big the 4 from 2018 is going to be a big pullback, because this one, it took 2 years. 2020 here, look at the dates here, 2020, and this is 2018. So this took 2 years. This one took about 9 months. And then this is almost 2 years now. This is where we are right now. So this is not a new bullish cycle in the dollar index, right? We're not going to replicate a 2 years move from where we are, right? Unlike some people thinking that the dollar is going to go to the moon. No, this is the same cycle. It's a mature cycle. At some point, this 1, 2, and 3 is going to end. So again, we're talking about the larger time frame now. Okay. So you need to understand, if you're looking at the larger time frame, it's time to be careful. But if you're looking at short term, then it looks like the cycle still looks incomplete, because again, if you go to the 4 hour, then as I explained before, that 1, 2, we have not reached the 100%, this 1 and 2 here. So if we just simply look at this cycle from August, this 1, 2 has not reached the 100%. So if we all we care is the shorter cycle, then it is still bullish, right? Now in terms of the short-term alternates, right? Now for example, we could just break down from here, for example. But even if we do get a breakdown, we can always adjust the count, maybe calling 3 ended here, right? I can adjust the count, move 3 and 4 and calling 3 ended here, or I can adjust the count calling 1 of 3 ended here, right? But the idea is, because of that sequence looks incomplete without reaching the 100%, right? And even this one also kind of looks like a 3 swings. All in all, you have to be favoring the upside still. Now again, that doesn't mean the shorter cycle cannot have a tweak. Let's say if we do get another leg lower, for example, let's say we sell off, we should be getting another support at the next 3 ways pullback here. Let's say if we sell off, okay, instead of rallying, we sell off, this 3 ways pullback right here should get another support, because overall the structure still looks incomplete on the upside. Okay, so the idea in this chart then is, as long as this level, this pivot 107.7 is holding, any kind of pullback that we see in the dollar index should continue to be supported in the sequence of 3 swing or in a sequence of 7 swing for the upside, right? So for now, we are calling wave 4 completed here, and we can go up. But for this view to be completely validated, we still need to break above the previous peak, which is the wave 3, right? Otherwise, for example, we can of course do double. Double is always a possibility. It's always an alternate that can happen. But as long as this level is holding, any sell-off, any pullback from the peak is always going to find support in the sequence of 3 or 7 swing. Okay, so that is the update for today, and have a nice weekend, everyone, and I'll see you all again next time.